Hey, back from Alpha Charts with a state of the market video. Today is May 13th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned near your time frame and risk tolerance. Before we get started, just a quick announcement. My friend Matt Petrilla at tradingequilibrium.com just came out with a new reality-based trading course. I started it myself, and it's been really good. So he breaks it down basically into very easy to understand bite-sized modules. You can see I've been doing it, so I'm not quite done with it yet, but I am really, really impressed with all the different pieces, and you can see how it's all broken down. So it's I look at it as shortening the learning curve, especially for somebody that's been trading anywhere from 0 to 5 years or so. I think that this type of course is going to be very, very beneficial. And again, you could definitely see all the way from starting to position sizing to open risk to specific trading tactics. Yeah, I mean, it goes over his entire way of trading. He's again a very seasoned trader. And so if you're interested, go to Trading Equilibrium, or you'll find him on Twitter at Trading Equilibrium as well. His name is Matt Petrilla. So want to make you aware of this reality-based trading course if you're interested. Okay, let's get to the state of the market though. SPX. So I've been talking about this broadening formation causing more volatility potentially coming up. And we're seeing that, right? That's literally what we are seeing. There's your VWAP from the all-time high. Price is still above it. And we're going to zoom in right over here. And you can see how it's just kind of chopping around in this expanding range. No one knows what's going to happen on Monday, but it's still obviously can't push higher, right? As we found out from here, can't push higher, but hasn't pushed lower. And this is a very, I think, a dangerous time to have a directional bias in the market, because this is saying that, again, as we kind of loosen up in this ranges, to me, I think the risk is more to the downside just looking at this one chart. Now, on the week, prices were down 0.29 on the SPX. And on the RSP, they were down 1.06. What does that tell us? That tells us that, once again, we're seeing overall more items, more of the mega caps being bought and less of the equal weight or the regular caps on that S&PX being bought. And the chart looks much different, right? Underneath all of its moving averages, and they're all turning lower, right? Aligning bearishly on the equal weighted versus the SPX, the cap weighted, which looks very different. And so this divergence, again, has me extremely, extremely worried. And when we look at, this chart, which is the equal weight versus the SPX, right? The cap weighted, we can see, again, I've been showing this chart now for a while. And again, we may have had a little bounce up here, but in the end, we're still in this downward motion. And so until we can show this is somehow real basing going on here, and a reversal, or at least a sideways movement of the cap weight of the equal weighted versus the cap weighted, it's hard for me to be bullish. I could be neutral in the market, but I can't get bullish until I think this chart changes, and we're not seeing it yet. Looking at the Qs, so we have this rising wedge, right? Somebody brought this to my attention. One of my super follow members actually brought this to my attention, and I agree with this, that we have a rising wedge into potential overhead supply, right? A break of this wedge and things could get nasty. That usually is going to mean, again, on the cap weighted Qs, if this wedge breaks, it means that Apple and Microsoft and Amazon and those Google potentially are breaking down, right? At least some of those, if not all of them, are breaking down. because that's the only way that the Qs are going to move lower, is if those mega caps move lower as well. Again, rising wedge into overhead supply, maybe a dangerous area to be in the market. Maybe not. Maybe that rising wedge isn't even valid, right? That's a possibility too. But it's what I see, and I agree with it. And a breakdown from that rising wedge would get me extremely more cautious to bearish, which we're not quite there yet. We're definitely cautious, maybe just slightly bearish. And so here is the equal weighted Qs. And you know, this 74 area is the area to watch. And you know, prices not even getting close to it, right? So that's a problem. Here's your equal weighted Qs. Just, you know, again, maybe this is a nice base, and maybe we come up and tag it and pull back and break out and everything looks good. We're just not there yet, and really there's no indication that we're going to be there anytime soon. Just what I see. And again, when you look at the equal weighted Qs versus cap weighted Qs, it looks a lot like the SPX, you know, down, there's some consolidation here and here, and the move down. Yeah, until this starts to base and things start to change, I'm not interested in buying on the long side aggressively anything, right? That's a problem. Again, IWM, you know, here's the IWM again, underneath all its moving averages. This looks more like a top than a base. And again, you say, well, what do you mean top? This was a top. Yeah, I know, but then we went sideways. So it's a choppy, nasty range. And without any motion upward, I worry this could break down again. Looking on the weekly chart here on the IWM, you know, so you have this area right here. If it breaks down, the next gigantic area of support is 128. That's a big move, right? This is a big move, 20-25% move. So to me, that's the worst case scenario, right? Another 25% move down in small caps. Again, along the way, is there potential some support at 145-ish? Sure, there is. And again, doesn't mean that it has to go all the way down to this area, but if this area breaks down, and to me, this looks like the breakdown is going to happen. I mean, on the weekly chart, when you look at this, to me, it just looks like a short, right? Especially if this 164-ish area breaks, right? And we get into this space down here, that looks pretty nasty. So I'd be real careful if that breaks. Now, we've tested this area a few times in the past, right? Over the past year or so. And it's held every time. The more times the area is tested, the greater the chance it is to break, right? 1, 2, 3, 4, 5, 6. This is maybe the 7th or 8th time this is tested, maybe more. As we churn through this, I think the greater the chance that this does break, and we could be in this area down here. So I'd be, again, very, very careful. If small caps are breaking down, they tend to lead the market. Mid caps looking very similar to small caps. Again, when you look at the weekly chart, to me, this looks more like a breakdown potential than a breakout potential. Say, oh, maybe it's making a base. Yeah, but price is now down here, not making the right side of a base yet. Could it change? Absolutely. But we're not seeing it yet. So we have to go with what we see, at least for this week. And for this week, you know what? Up here, you say, okay, making the right side of a base. Down here, you say, breaking down from a, you know, this kind of 3 bump up, then breaking down. That is a very dangerous looking chart to me as well. And so overall, the indexes, when I look at it, potential support areas, but if those support areas break, I think there's a lot of danger below the surface, would make me extremely cautious, but then might have some opportunities on the short side. Let's look at the sector ETFs. Sector ETFs, here is financials. Again, let's go to the weekly. I've been talking about this chart now for a really long time, as y'all know, about how important this $30, $31 area is. Price closed at $31.90, right, on the day and on the week. So we're not that far above where, again, that potential support is. you see the top, then there's your 3 bumps. Again, I always look for these 3 bumps. Then the breakdown, it held here. The snapback was not amazing in any way, shape, or form. Stayed underneath the 200-day, stayed underneath the declining 50-day. Now things are coming back down around. To me, financials look like a big time problem, right? With $30, $31, 30, 50, whatever, someplace in here being the line in the sand. Price gets below $30. There's no reason this market's in big trouble. We're not there yet. We'll see if it holds. We'll see if it could just chop around sideways. But this is, again, a very concerning looking chart right now. Let's look at the semiconductors. We're going to do equal weights first. Equal weights looks like a bear flag, right? I wish I had some good news for you guys today, right? It looks like a bear flag. That's what it looks like to me. Not looking good on equal weights. Cap weighted, again, I'm looking at both because semiconductors are so important. Under, false breakout look underneath a lot of the moving averages, even though the 200-day is still rising. It had a false breakout look there and not a pretty look at all. So semiconductors aren't looking good. Banking sector's not looking good. Let's look at transports, equal weighted transports. Had that rising wedge, and again, choppy kind of, but trying to break down underneath all of its moving averages. So transports not in a bullish look at all. And the standout is, let's see, housing. So housing is still the standout to some extent. It's above all its moving averages, and they're all kind of moving higher. And there's nothing, it is what it is. We'll see if it can get to the next level above $73, right? Or if this breaks down here. So, I mean, it's not nearly as concerning as the other ones, but that is maybe the last piece to fall before we start to get, again, we don't know what if there is going to be a downturn, what is going to be the impetus for that? Is it going to be the mega caps breaking down first and then housing breaks down after that? But the chances are, if things are going to move lower, they're both going lower, right? Mega caps and housing. But right now, we're not seeing housing. But we're also not getting above $73. So we'll see what happens with that, okay? And I could see how this 72, I could easily draw another, very narrow base, kind of like right there, and just take this part away. And it could be something like this, right? It's the magic of technical analysis. If your first area doesn't work, just draw a new line, right? New area. So this is the new area for XHB, right? And we'll find out if it's going to do this or do that at this area. But overall, the sectors, let's do a summation. Financials looking pretty bad. Semiconductors looking pretty bad. Transport's looking pretty bad. Housing may be the last piece to fall. We'll see if it could break out of this area or not. So a lot of concerns on the sector ETFs and again, I look at it as, how is the economy doing, right? If those pieces are not really humming right along, it's going to be very hard for the market to price in forward growth. That's my opinion. So sector's not looking great. Index is not looking great. Let's look at the internals. See what the internals are telling us, right? That's not what I wanted. I want this, and I want to get this off and go to line chart. And we're going to start with the VIX, as we always do. VIX is low, right? Again, I look at the VIX being this low as a rubber band that's being stretched, right? And from contraction comes expansion, right? Contraction, expansion, contraction, expansion, contraction, expansion. When we look at it, contraction over a long period of time, expansion. And that's, I guess, part of the issue is that VIX can stay on the lower side for a while. Now, all this is in a rate tightening cycle, right? Meaning, dropping rates. This is a rate expansion cycle. So I don't know if we can use this as an exact measure of what the VIX can stay low for a long period of time, even though that may be. I look at this area as potential contraction to expansion. But what remains to be seen. But a VIX very low, again, that's a contrarian type indicator. And the lower it goes, I think the lower it goes, the more that rubber band is stretched, the greater the chance that it's going to, the higher the expansion could potentially be. Again, increased volatility, that could be a bigger problem. Credit spreads, on the week, they did kind of trend up a little bit. But again, going to the weekly charts, this is still in play of up, consolidated up, consolidation up, consolidation up, consolidation. Again, widening of credit spreads is kind of my longer, when I say longer term, I don't know if that means a week, a month, or a year, but my expectation is that up is the next move based on the history of what happens in this look. Okay, so up is most likely the next type of move. Again, up would again be a negative on the market in general. We just don't know if it's a week, a month, a year from now. But I have a feeling, and when I say a feeling based on history, that up is the next move. Again, it may be choppy like this, it may be straight up. I don't know what the impetus would be. I don't know what the whether you want to call it the black swan or what the event would be to cause it to do this. It could just be the normal business cycle of tightening, money supply getting tight, and credit, right? It could be that simple. What else do we want to look at? Put call ratio. This tells me that people are starting to trend a little bit bearish, but they're not all that bearish yet. Nothing extreme. So there's nothing really to see here. Breadth study, MMFI. Let's look at that. Breadth kind of is trending up a little bit, but overall it's down, and it's just not good at 41% of stocks above the 50-day. All that did was give us more room for things to chop down again, because it's not. But we do show some expansion. I don't want to get too bearish, right? I don't want to get too crazy bearish, but it's kind of in no man's land. Another way to look at it is the value line geometric index, which I do look at sometimes. And looking at a weekly value line, you can see this $500 level is extremely important. So what the value line shows, it's 1,700 stocks, and this shows what the median, not the mean, but the median price of the stock is. So it's a pretty good breadth study, if we want to look at it that way. And you can see how breadth is just deteriorating again with that $500 level being a big deal in this chart. So we're not quite there yet, but it is deteriorating. And if and when we get to this area, that's when the rubber meets the road to see what is actually going to happen. But it's a deteriorating breadth study. Another thing I want to show you guys, again, I'm adding a couple things, is the copper ratio to the gold ratio. Okay, copper futures to gold futures. And so let's just go to weekly on this. And so you can kind of have a historical perspective. So this is, 1988, right? We're going back 93, right? There's a recession, came back, touched it, gone. It kind of touched it down here, didn't quite get there. You see this was the housing crisis right here, touched it over here in 2011 on the recovery, went. This is, again, this was, was this a recession or not? I don't know, but this was a rough time in the markets, 2015-16. It came down below it. This was COVID, right? That was a big deal, right? And now look at us back below this. You want a danger indicator? Here's a danger indicator, copper to gold ratio, right? So basically copper means that we're building stuff, housing, expansion. We use copper in so many industrial things, wiring and such. So versus gold, which is a safe haven commodity, again, less industrial uses than copper. So again, and there's other reasons for it. I'm not an expert on commodities or that, but I do know the copper gold ratio does help us with a leading indicator of the market. And this is a very concerning look right now on the copper gold ratio. So, those are the charts. I don't make them up, right? I don't make them up. We're just evaluating them, not looking good. So let's sum up everything. Right now, indexes are looking like they could be in trouble, right? Of expansion and just not looking great there. The sectors are looking like they could be in trouble. The internals looking like they could be in trouble. I try to give you guys breadth. I try to give you guys sentiment. I try to give you, just as much as I can, as far as all that goes. Looking at the dollar, by the way, let's look at the dollar. Dollar starting to rise again. I forgot to mention that. We had this area again that kind of held, and we'll see if it gets back above what is 103, 104 area. That's a very key area. If it gets above 103, 104, that's going to be a big headwind for stocks going forward too. So again, we don't have a lot of things on our side right now that says be a bull in this market. We have everything saying hit the brakes. If you got profits, take profits, play small, look for potential shorts on the short side if things do start to break down the way we just talked about. So it's caution, right? This is a very cautious market. And on top of it, there aren't a lot of leading stocks, right? There's not a lot of stocks that are just zooming. You may get a day or two of something that zooms off of earnings or off of whatever, but you're not getting this follow through move higher. So we're getting very cautious. And, there's a debt limit thing that's coming at the end of June, whatever. There's going to be a lot of posturing. Maybe that's the event. I don't know, right? It could be the event. It may not be the event. Usually these things on the last second get, the midnight, they get resolved. But whatever the event is, I would be extremely cautious in this market. Hope you all are doing well. Take care. Leave me a like and subscribe to this channel if you like my stuff. I really do appreciate that. Growing my YouTube and my Twitter at AlphaCharts365 is a big deal for me. So I thank you all that have already subscribed, and please, if you haven't yet, subscribe to my channel and check me out on Twitter. Okay. Good luck this week. Take care, y'all. Goodbye.